Welcome back to the Wall Street Podcast. Today, we're conducting a deep dive into a recent report from Goldman Sachs.
Yes, the report is titled Cambricon 688256SS, China Cloud Capex and Expansion, 2025 Revenues Guidance in Line, TP up to RMB 2,104 by. It came out September 1st, 2025.
Okay.
And it really focuses on Cambricon's strong second quarter performance for 2025.
Right.
And it looks at their future prospects, too, especially with China's cloud spending ramping up and, supportive AI policies. Our mission here is to really distill the key drivers and implications for you.
Great. So let's kick things off with Cambricon's Q2 performance and their outlook. They reported pretty robust results, didn't they?
They did. The 2025 revenue guidance midpoint is RMB 6 billion. That's a 411% increase year over year.
Wow, 411%. That signals some really aggressive market capture.
Exactly. And Goldman Sachs clearly took notice. They bumped up their 12-month target price by about 14.7%. To RMB 2,104. Still a buy rating.
So what's underpinning this positive view? Higher AI chip shipments seem key.
That's the main driver, yes. Directly linked to that rising China cloud capex, the capital expenditure, essentially investment particularly for AI infrastructure.
Is it just market demand, though, or are other factors like government policy and maybe their own internal efficiency helping out?
Oh, absolutely. Supportive government policies are crucial. And we're seeing the emergence of, local chipsets for inferencing that's using the AI model for predictions.
And operationally?
They're showing definite efficiency gains. You look at revenues per engineer, it went from about RMB 2 million back in December 2024 up to RMB 5 million by June 2025.
That's quite a leap. Shows they can scale productivity fast.
It does, turning R&D into actual output.
Okay, let's talk about that CapEx surge more broadly. What's really driving this massive spending by the big cloud players in China?
Well, what's fascinating, I think, is the direct line you can draw to generative AI's rapid development and also the launch of local foundation models like DeepSeek late last year.
Right, creating just immense demand for the underlying infrastructure.
Precisely. Look at Alibaba Q2 25 CapEx hit RMB 39 billion. That's US $5.4 billion. Up 57% quarter over quarter and double year over year.
Double. And Tencent.
Tencent's Q2 capex jumped 119% year over year. It actually led Goldman Sachs to raise their 25 and 26 capex estimates for Tencent, too.
And the government's playing a role here, too, with these new state council guidelines targeting high penetration for AI agents and terminals?
Yes, over 70% penetration by 2027, then over 90% by 2030 across 6 key sectors. It really underscores the government's commitment to building out AI infrastructure and, efficiency.
How does that policy support mesh with the local AI supply chain? Is it robust enough?
Seems to be. The first half of 2025 saw strong growth right across that chain. Solid raw material supply, strong contract liabilities, which suggests healthy order backlogs.
So an increasingly resilient local ecosystem.
Exactly. And that's benefiting local players like Cambricon. We're seeing rising adoption of local chips in AI servers, high-speed networking, too.
So thinking long-term for Cambricon, what kind of trajectory are we talking about?
Goldman revised net income estimates up by 11% to 34% for the period 2025 through 2030.
Significant revisions.
And projected AI chip shipments are substantial, about 145,000 units this year, 2025, then potentially exceeding 1 million units by 2028 and over 2 million by 2030.
That's huge growth. What would that mean for market share?
Well, the estimate is for Cambricon's China AI chip market share to grow from just 1% in 2024 to perhaps 11% by 2028. So for you watching the semiconductor space, that signals a serious challenger emerging.
Okay, that raises a key question then. It's a competitive market. What gives Cambricon its edge, do you think? And what are the big risks investors should keep an eye on?
Well, their edge seems to lie in, first, disciplined cost control. Second, that continuous R&D in both the AI chips and the software stack. And third, that broader supportive environment for local chips we mentioned.
Makes sense. And the downsides?
Key risks to note, I'd say, are potential wafer supply restrictions. Remember, they're on the U.S. entity list. Also, maybe slower than expected development of their cloud chips. And just generally, intensifying competition. It's a fast-moving market.
Very true. So stepping back from just Cambricon, what are the wider ripples here? What does this mean for the whole Chinese semiconductor and AI supply chain?
It looks like a systemic uplift. We've seen Goldman upgrade a whole range of companies, actually, from SMIC and VeriSilicon Think IP and design
Right.
to Joaquin and SenseTime, covering areas like foundry, advanced packaging, AI servers, even switches.
So right across the board.
Pretty much. It indicates this expansion of the local AI ecosystem is lifting quite a few boats.
Thinking about those state council targets, again, AI agents, intelligent terminals becoming common by 2027, 2030. How will this actually touch the average person's life?
The public is likely to see a pretty significant integration of AI day to day. It means, well, enhanced efficiency, new user experiences across tech, industrial, consumer sectors, even governance.
So smarter phones, automated services.
Exactly. Smarter personal devices, more automated public services, potentially pervasive AI agents, just changing how you interact with technology and services daily.
So wrapping this up, what's the key takeaway for you, our listener? It seems the convergence of aggressive cloud capex, very focused government policy, and strong local innovation points to a rapidly accelerating AI landscape in China.
Indeed. And as you digest all this, here's perhaps a provocative thought to consider. With this kind of concentrated investment and clear policy support in China, how might this specifically reshape the future dynamics of global AI leadership and the wider market?